Welcome to Forex Films. Today is Sunday, October 9th, 2011, and we're about to start a new week with some very exciting opportunities. This is a daily chart of the Euro-US dollar, and you can see that we have had wave 1 down. This whole mess has been wave 2, and then this is most likely a wave 3. And how we can count this as complete is 1, 2, 3, 4, 5. You can also check that out in my Elliott wave analysis section for more details. And you can see that we've reached a 5-wave terminal point and turned around. While this correction has come up above 23%, hasn't reached a basic 38.2% minimum retracement that we like to see. And as you can see, wave 2 lasted from the end of May to the end of August, and we have less than a week of correction for this wave. That shows us that most likely this correction is going to continue. And we have reached this short-term exponential moving average, which while we're trending, I like to sell off this line, but this will most likely be surpassed in any medium-term correction like we are in right now. As you can see, this would be wave 4, and this is wave 4 of 3. So the correction is likely to end somewhere in this wave 4, and which puts us likely between the 38.2% retracement and the 50% retracement. Let's jump out to the weekly. Now here on the weekly, you can see we closed and opened the week at basically the same level. This is the first week of the month. We're likely to continue sideways to a little higher for the next maybe 3 weeks. But magnitude will be limited, and the thing to really watch out for here is that risk is still heavily to the downside. So still keep in mind that you're looking for points to sell at for the most part instead of points to buy at. So let's move on to Australian US dollar. This is an 8-hour chart, and I'm counting this as wave 1, 2, 3, and then an extended wave 5 here. You can see we've almost reached the 38.2% retracement part here. And this would be wave 1 ending down here in the low 99s. This spike here could be a smaller subdivision wave B, but really what we're seeing here is that magnitude is most likely very limited, which shows us that even if we do continue to correct on this, it's likely to be a triangle. And this high point on last week might be the high point for the entire correction. But it's still a good offset trade while there's still people wanting risk, because it will help you out with rollover if nothing else. Same with New Zealand dollar. But New Zealand dollar, actually we'll take a look at New Zealand dollar right now. As you can see with New Zealand dollar, the extended wave is the third wave just like normal. Wave 1, 2, 3, 4, 5. And you have the end of the larger wave 1 all the way up here. So we could still easily have a lot of upside momentum in this pair before returning back to the short side. Another very interesting trade is the dollar Swiss, and this is especially interesting because of how it's been trading as of late. Let's throw some lines up on here. As you can see, this is looking like a diagonal, and we have barely touched the edge of this correction. We continued to move higher even as some pairs were rallying drastically against the dollar, and this pair has basically not done anything. But we have a very bearish setup here, and what makes it especially bearish going out to the daily is we have our origin point most likely right around here, around 86, and diagonals retrace very quickly, so in relative terms. So we have a 600 plus pip drop that could happen very quickly, very profitably, and then this pair will start moving higher quickly once again. Japanese yen. This is interesting, not for trading right now because it's been so consolidated, but because of how people are trying to trade this and where people think this is going. Long term, you can see we're still very much locked into a downtrend, and we will have another drop off probably to about 75 before we can correct even higher to 80, and then once again resume the downtrend.